Now for the latest on the Iran war and the impact on the energy markets, I want to bring in Amos Hochstein, a former White House senior advisor, now managing partner with TWG Global. Right now, by the way, we're looking at WTI up about 3.5%, only 73.89. Brent up at 78.59. Curious your reactions about the news that we learned over the weekend and what clearly has been, at least for now, the end of a ceasefire.
Good morning, Andrew. Look, clearly the ceasefire now is, we were not really in a ceasefire. We were in this MOU period that was supposed to give us a 60-day reprieve towards a ceasefire. And those talks are really strained right now. I'm not sure that we're back to war. We're sort of in this weird period of we're not at war, but we're also not in a ceasefire. We're in limited exchanges. And these exchanges are clearly more severe the last 24, 36 hours than they were before during this ceasefire, this very fragile 2-week MOU period. We're seeing really the consequences of a hurried deal with an MOU that was drafted very quickly and not carefully, and the wording, which Iran believes gave them the right to control the straits, even though they don't charge a fee, but control nonetheless, with the United States saying that you do not have control. So this end of the ceasefire, or the end of this MOU, is really about control of the Straits of Hormuz. And so Iran believes, as I've said on your show from the second week of the war, that we are never going back to the period before the war where it was open.
Amos, but then there's a larger question, which is have the markets gotten this wrong? Look, all the people that I've spoken to around these negotiations seem to suggest this is a true sort of shoot the moon situation, meaning to reach success. And so what is plan B? Is there no plan B? And what does plan B cost insofar as right now WTI crude still at 73, 75? The stock market is not, reversed in any real meaningful way as a result of all this.
I don't think there's a plan B. I think that for the moment, this is probably the new normal. Where we have the strait is sort of open. We have some traffic through the straits, but not a lot, and it's sporadic. So we had a couple of days of a lot of traffic, and then now we have nothing. And we may go back to the two sides through the mediators getting too quiet, but it's not going to last. And we're probably going to be in this sporadic period of violence between now and at least the end of the year. I don't think the president wants to go back to a full-fledged war before the midterms. The Iranians don't really want to go back to a full-fledged war. I would point to two other things that are happening that the market may not be paying attention to. One is the reports from the last hour that the Saudis have exercised some strikes in Yemen. And the Houthi leaders saying that they will respond. Remember that we never, during the war with Iran, the Houthis stayed out of it, and that could really escalate the ability to move cargo and oil and gas through the region. And the second is the escalating strikes by Ukraine on Russia's fuel, which will mean that even if oil is not as high, the fuel prices in Europe and Asia and eventually the United States will come up higher, almost mirroring as though the oil prices was more elevated than it is. I think what markets are getting right is that we have a little bit of movement of oil, which relieves some pressure valves. So that part the market's right about, and therefore this crisis point that we were reaching before the MOU is avoided. On the other hand, the market is missing that there is enormous amount of risk that is not priced in at the moment.
Okay, so but let's talk about that. So when you look at 73 on WTI crude, for example, or Brent, you can take your pick on which metric we want to use. Do you think that's appropriately priced for where we are when you say the risk out there? What does that look like to you? And by the way, everybody seems to be sort of circling the midterms. Is there something to be even talked about ahead of the midterms? And is there a different strategy post midterms? And why would Iran, by the way, go along with our political schedule?
Well, Iran has benefited enormously right now from this MOU. Remember, before the war, Iran was exporting not that much oil, and they were forced to take a significant discount on their oil, which was contributing to global prices because the Chinese were the only customer of record, and they were paying this discounted price. Now, Iran over the last couple of weeks has sold much more oil than they did before the war, so over 2 million barrels a day, and they were selling it at a much higher price because the prices went up and they didn't have a discount. So they're funding their rearming, reoperation, rebuilding, reconstruction. And so for them to make that go a little bit longer is a good thing. So yes, the president has the midterms, but the Iranians are gaining here as well. And so that's why we're in this period of not war, not ceasefire. The one thing the Iranians cannot afford is to give away the control of the Straits. So when you talk about the price right now, look, the market decides what the price is. So I can't really say it's the wrong price. I think it's a bit low relative to the risk level for a couple of reasons. One is the elevated risk in the Straits, the elevated risk in the region as a whole, and what's happening in Russia and Ukraine, which is far more severe than people realize. But it's also at a bigger risk because we're going into hurricane season and the inventories in the United States are much more constrained than normal. And so if any event happens anywhere in the world, if we have an emergence of violence in Libya, if we have an earthquake somewhere, if we have a storm that shuts down production for a week or two in the Gulf of Mexico, all of these now do not have any spare capacity to be able to fill that gap if it emerges.
Right.
And so that is not priced in at all at the moment, in my view, with 73 at WTI and Brent, I don't know, what is it at?
78.
78 or 79.
What I'm trying to understand longer term is just, frankly, how this ends, or if it doesn't end, can it just sort of mosey along at this pace? Meaning, could WTI just sit at this number for a very long time and we have a sort of standstill situation of sorts that just goes back and forth? Or do you all, how do you think this ends?
I don't think anybody knows how this ends. There is no plan for the end game. The end game was supposed to be this MOU that would last for, let's say, 2 to 4 months, followed by a nuclear deal that resembles the JCPOA in some fashion, with some amendments and changes, but roughly that is the end game. Iran benefits, the United States benefit, the Iran regime stays in place, while they also get the opportunity to not have to agree to anything on missiles and support for their proxies in the region. And the nuclear deal is something that they basically agreed to already before. And the U.S. can call some kind of victory. That's just really hard to do in these circumstances because the Strait of Hormuz became the new nuclear program for Iran. That used to be the big bad weapon of choice for Iran to threaten the West. Now they have a cheaper version, which is the Strait. So they're not going to give up that control. And that is what's standing in the way. If that doesn't work, that nuclear deal that I just described, and that could be reached, sometime after the midterms, I think it's hard to say that anybody has an alternative view other than just a very prolonged status quo.